Let's go to Rajat Rajgarhia now, Head of Institutional Research at Motilal Oswal Securities. Rajat, thanks a lot for joining us. As we head into the earnings season, what's the number that you're looking at in terms of year-on-year growth for Sensex companies and also the companies that you cover?
Good morning. For this June quarter, we are looking at roughly 17 to 18% earnings growth for both our universe and for Sensex companies. And when we were looking at these numbers a month back, we thought that the numbers that we will compile for June would have been higher than what we are reporting now. But somehow there have been several sectors which have seen toning down of estimates, which has pulled down the growth rate to now 17-18% for the aggregate.
Okay. Well, actually, that's what I was coming to, Rajat. The Tata Steel volume numbers that came out a couple of days back didn't look very astounding, though, of course, you will be better placed to comment on that. Likewise, the auto sales numbers for June. What would your full year estimates be at this juncture, going by the data you already have for Q1?
For the full year, at the profit level, we are looking at around 22-23% growth, and the EPS growth is slightly higher because of the free float impact. But interestingly, this 22-23% growth is largely because of couple of the global operations of Tata Steel and Tata Motors, both Chorus and JLR, are likely to report a much better number in FY11 compared to FY10. So they are the two sole reasons for this growth rate to move up to 22-23%. I think FY10 number was a depressed number more because of these two companies. In FY11 growth also looks higher purely because of these two companies. Otherwise, there are a lot of sectors where you are going to see growth rates being tempered down for our estimates in FY11 now.
Sure, let's talk about those sectors then. Which are the sectors where you think the earnings growth is going to be higher? I mean, which sectors are going to lead to this 17% growth, apart from, of course, the global cyclicals or the global stocks that you've already mentioned?
Look, excluding these two global cyclicals, the other companies which are going to lead up the earnings growth, first is of course Reliance. This year should be a pretty good year for Reliance from the growth point of view, as the refining margins turn out to be better than last year, as the gas volumes or the gas profitability becomes better. So Reliance is leading the charge. Second is ONGC. The APM gas price has been hiked, and hoping that the subsidy burden this year would be lower, pushing up the net realization. So ONGC is another contributor. And plus you have some of the private sector banks like the HDFC Group, ICICIs, who are going to drive up the profit growth. So there are concentrated names which are actually going to drive up the absolute growth number in FY11 over FY10.
Who would be the laggards, Rajat?
I mean, in terms of sectoral, telecom is one space which is really going to lag this year. You're going to see a big absolute drop in growth rate, or you're going to see a decline in profits in FY11 over FY10. Cement is another space which is looking terrible for this quarter, for the coming quarter, and for the year as a whole. Then you have metal space which has started seeing downgrade. You already have seen a good downgrade happening on the steel side, and if trends remain weak, then this space can change the aggregates by a meaningful number. These are some of the ones which are actually leading the downgrade in the estimates right now.
Rajat, the sector that's really outperformed both in terms of earnings and in terms of price performance in FY10 was clearly auto sector. Now, the base effect will start to catch up. So, what's your projection for auto sector, both in Q1 and also for full year FY11?
For Q1, we now have the volume numbers for all the companies. So volume numbers have been quite okay. The growth numbers have been okay. I think this will be a quarter where there should be good margin pressures, both YOY and QOQ, for most of the auto companies. Similarly, if you look at for FY11 year as a whole, overall volume growth will still be okay. You already have Bajaj Auto guiding for 4 million. For Maruti, we are looking at 15% growth. M&M should do well because of monsoons. Commercial vehicle is definitely going to carry on the recovery which started just few quarters back. But margin expectations have got toned down. The only difference here is that the second half margin expectations can change if the current commodity prices prevail or if we're to turn weak. So I think the second half profitability metrics could be better for the auto space compared to what it is looking right now. As far as this June quarter is concerned, our sector aggregate growth profit YOY is 29%. This is including Hero Honda's profit growth, which is just around 5%.
Rajat, where has the market not yet discounted what you are expecting in terms of earnings? If you have to pick something before the numbers are announced, where would you invest your money?
Difficult to guess where are markets not pricing in. Market these days price almost every event in a very short period of time. But let me rephrase that. I think you will see few sectors whose earnings momentum are likely to accelerate or get better from here on, and they are the stocks which will hopefully do well. Three sectors which will top on that list. First would be financials. You will see improvement happening quarter after quarter in their numbers for the next 3 to 4 quarters. Second would be the oil PSUs, and this includes all ONGC to OMCs. You will see gradual improvement in the numbers coming from them on both the P&L account and balance sheet. So markets will get excited about that. And I think third, pharma is looking quite interesting. There are several mid-cap pharmas, large-cap pharmas where you will see numbers turning better as we will move forward. So these are few sectors where numbers for the remaining 9 months could be better than what the number for 1Q is going to be. And that's the space that one should remain excited about.
Rajat, in Q4, the stock that really spurred the market post its earnings was L&T. We had big outperformance from L&T. What's your view of this particular stock and also some other stocks in this particular space?
In the engineering space, this quarter on an aggregate basis will be slightly muted. Anyways, Q1 is generally the lowest quarter of the year. But coming specific to L&T, this quarter there should be a 20% plus kind of a top line growth. Although the profit growth will be constrained because of the investments that they are making in some of the newer businesses. But anyways, I think Q1 would not be the key conclusion of making a business view on these companies. BHEL in our universe would be the best company to report in excess of 25% growth on all the three parameters, sales, EBITDA and the PAT. But L&T, given the surprise that they have thrown in the Q4 number and the way markets have reacted, at least the tone has been said that both FY11 and 12 can still throw surprise compared to what the current estimates are building in.
Rajat Rajgarhia, we do appreciate you taking time for us. Thank you very much for joining us. So that's how Motilal Oswal is planning or getting into the earnings season. That's the stocks they are bullish on.